All right, good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with a news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money. We're live on the air now, 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Follow the bouncing ball this week. Another mostly lower day for stocks and another mixed finish today as the month of September continues to get off to a sluggish start following a volatile and record-shattering month of August. We started the Labor Day holiday shortened week and the month with the Dow plunging more than 600 points on Tuesday, a gain of 38 yesterday, and today down more than 200 for the Dow Jones Industrial Average, the S&P 500 slipping 17. The Nasdaq, though, managed a closing gain of 43 points. Investors continuing to focus on the prospects of an economic slowdown. Recession fears were raised last month when the July jobs report showed the nation's unemployment rate ticked up to 4.3%. We'll be getting a new reading tomorrow, the monthly jobs report from the Labor Department. Considered the big enchilada of monthly economic reports. Will be coming out an hour ahead of the opening bell on Wall Street first thing tomorrow morning. We did see stocks closing mostly lower today, but off the session's worst levels, by the way, ahead of that highly anticipated jobs report for the month of August. Stocks got hit yesterday on another economic reading. The Institute for Supply Management's Manufacturing Index showed the manufacturing side of the economy shrank for the fifth straight month in August. We did see bond yields move lower this week. In fact, the yield in the 10-year note down to 3.73%, the lowest we've seen since June of last year. The number of people in unemployment lines last week fell slightly to 227,000, touching an 8-week low and reinforcing the view that companies are reluctant to lay off workers even as they clamp down on new hiring. New claims declined by 5,000 in the 7 days that ended August 31st. Also this week, we got the reading that U.S. job openings fell in July to the lowest since the start of 2021. Layoffs have moved higher, consistent with other signs of slowing demand in the labor market. Restaurant chain Red Lobster's won a court approval now for its Chapter 11 bankruptcy plan, allowing it to be acquired by RL Investor Holdings, LLC. RL Investor, an entity created by funds managed by units of Fortress Investment Group, as well as co-investors TCW Private Credit and Blue Torch. That deal is expected to close by the end of September. Big topic of discussions among lawmakers in Sacramento, reparations to African Americans for slavery and racial discrimination. Some bills in the California legislature advanced recently. Similar discussions happening in other states. We'll take a closer look at those proposals with someone who's been following the issue very closely, and that would be Andrew Quino, a Pacific Legal Foundation attorney, who's also the director of the Reparations Task Force. Meanwhile, a new survey finds a surprising percentage of American workers now say they are living paycheck to paycheck. I'll discuss the latest on that with Sarah Foster, principal writer at Bankrate.com, who covers the Fed and economic policy. But first, on your money, the markets, the economy, along with the whole works this afternoon. Joining us live now, the one and only Ken Winans, top-ranked money manager. Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, soon to be Investment Atlas 3. We'll be hearing more about that soon. Also, Forbes magazine contributor. And now I'm also elated to announce Ken Winans has his own weekly show here on 790 KBC, Winning with Winans, heard Monday nights, 6 p.m. on your favorite station, 790 KBC. Ken Winans, thank you very much for coming to the line this afternoon.
And Frank, we're going to have a lot to talk about next Monday, I'll tell you. We'll save the best for last, but let's jump in today. And as amazing as it is how much you rattle off on what happened today, the big news that came out of Washington that dropped my jaw was the Biden administration, the Green New Deal administration, giving mining rights in Idaho to what will be the largest gold, silver, and rare earth metals mining operation. And they liked it so much, they even lent them $2 billion. So we are going back in time on how do we pay for our debts. We're going to dig, baby, dig, and we're going to dig the gold out of the ground. But that's the good news. I think that people say, hey, how do we get out of this hole? We have that. The other good piece of good news, and I wrote about it in my latest Forbes article called The Giant Greenback, and we all as Americans should be very thrilled that we live in a country that has had a relatively stable currency, which is actually the one big difference between now and the 1970s, is the fact that the dollar, in spite of the inflation, which could have been much, much worse if we had not had that strong currency, compared to what's going on in Mexico, what's going on in Canada, Europe, we're in much better shape from a currency standpoint.
That's certainly good news, and I had a chance to mention that article in my conversation with Steve Forbes himself in the last week or so. So congratulations on your latest article in Forbes magazine about the almighty dollar, the giant greenback. And let's talk about what you started off with here, gold and certainly silver too, right, Ken? What we've seen gold hitting record highs recently. Silver has been along for the ride, not at record highs, but certainly up around $30 an ounce, which has been a big percentage gain since the start of the year. What do you see ahead for both gold and silver?
Well, I think the one thing that I think everybody who listens to the show has listened to you for a long time knows that you bring on guests who have gone through the cycles, me being one of them, and that the inflation cycle we're nowhere near being done with this. Look at what happened with the dock workers strike. What's going on at Boeing? You have this tug of war between commodity prices move up, and then you have to raise wages in order to, as you said earlier, Frank, a lot of people are having trouble, paycheck to paycheck. This is the plight of inflation. It takes a while to get it out of a system. So we have to accept that. And so when you have that, you should, as an investor, be looking at having metals in your portfolio. And by the way, I'm not a gold bug. I'm not one of these people who thinks you've got to have gold in your portfolio all the time. I'm just saying that while you have an inflation situation, commodities, including gold and silver, need to be included in that mix.
We're on the air live with money manager Ken Winans. And Ken, you also cover the cryptos these days. We've seen a Bitcoin retreat from its recent high. What are your thoughts here about what's happening with Bitcoin and the other cryptos now?
There's one word to describe crypto right now. It's ugly. They have just absolutely gotten creamed. And there's a lot of different reasons for it. But I think that everybody does have to remember that, look, they're very volatile. They trade like a commodity. They are a commodity. The volatility is like any other commodity that I track. So the fact, it's amazing when you look at Ethereum down 29% this quarter, and just this month alone is down 7%. This month is 5 days into it. So the point is, if you're going to have crypto in your portfolio, you have to be able to withstand the volatility. But as of right now, they are both in downtrends. If you have those things in your portfolio, you should try to hedge your positions, or you might actually want to consider net shorting them if you're a trader. But no, the trend is down right now in the cryptos that I monitor.
All right, and what about what's happening with Ethereum? There was a lot of enthusiasm, certainly when the Ethereum ETFs came up, and I know you track the other various offerings. What are your thoughts about some of the altcoins and meme coins, which have also been on the elevator ride down lately?
Well, I think it's like everything else. I do think, when you go back and look at what's happened with crypto really throughout much of this year, and including, we have to go back and remember the hit that they all took in 2022, just like stocks. We have to remember that they do, and we can argue about why, but they have a strong relationship to the NASDAQ. So I don't think it's a huge surprise that crypto in general, as the AI stocks have blown up, as the NASDAQ has retreated, that you're finding that relationship is very much intact. It's not day to day, it's not the same amount, but it's the direction as I look at it monthly and quarterly. So here's one thing to maybe consider. Do remember that not all cryptos are the same. I know that people throw them in the same basket. It's like saying all stocks are the same. They are not. Bitcoin and Ethereum are structured very differently. You might dare say they have different buyers and sellers. But I think that what happened with Ethereum is just that there has been a very slow move on the ETF front, and certainly there are some more regulatory, barriers being put up, but I think that's a big part of it there. But the fact that Ethereum has taken a much bigger hit than Bitcoin throughout this quarter tells you that, again, from a wide appeal standpoint, people have been taking their profits in Ethereum. Now, to say this, we might sound like we're crying over spilled milk. Do you remember that both of these, over the last 20 months, Bitcoin is up 251%, and Ethereum was up 105%, largely ahead of pretty much anything else in the stock world. But things that go up do pull back, and we're certainly having that seasonality play out now.
On the air live with money manager Ken Winans, and you mentioned the word earlier, volatility. Ken, we saw what happened last time the jobs report came out, which was one of the big reasons the market got spooked a month ago. Mercifully, we did see a rebound to record highs, and now this volatility again. What about playing volatility here, and what do you think is going to happen tomorrow when we get the latest jobs report?
Well, and that's a good, Frank, it's the end-all, be-all question. I can tell you that when I looked at the markets all day today, it was very clear that things that pay income, whether it's a fixed income in a bond or it's a dividend-paying stock, whether it's a preferred stock or just a good old, blue chip, as we used to call them, they were moving up. And so it tells me that people are loading up on interest-paying type things because they do think the Federal Reserve is going to drop rates in a week and a half, and number two, that the jobs report is going to show continued softening. So I think we're going to find that. But more important is that, Frank, you and I have been doing radio interviews together for a very long time. I don't think you and I can fondly remember a happy September. They just don't happen very often. And as much as Octobers have been brutal too, I find that when I look at the math, I'm looking at it right now on one of my spreadsheets, since 1970, which captures the last major inflation cycle, when you look at the Dow, the S&P, or the NASDAQ, during that time, all three indices are on average down during the month of September. So that's all years going back to, certainly back to the era of Apollo. That's how far back you have to go. But it's just a soft period of time. A lot of it's economic data. A lot of it's queuing up for the news going into the year. But what I do think is important is that people do need to be looking at their portfolios. They need to be making some adjustments to get ready, which could be a pretty good post-election run in the markets.
A lot of wild cards, though. Would you be placing any bets with the various volatility vehicles out there that play on the VIX index, the volatility index, the so-called Wall Street Fear Index?
I monitor the VIX very closely. It's been a part of my arsenal of indicators throughout much of my career. I mean, I don't think it's a bad idea. People talk to me all the time about hedging, and certainly I'm a commodity guy. I believe in hedging, and I believe in hedging even in equity portfolios. Here's the thing. The underlying strength of this rally, of this market, although it's an old bull, it's still running very, very strong. And so what I would tell people is that, look, if you're going to hedge, make sure you do it with some knowledge that you don't want to leave it long term. They can come back and bite you very badly if you're wrong. But some of the ETFs out there that play the VIX, that's fine. But the VIX is a prickly character, Frank. You can have those very powerful one-day massive move on the VIX like we saw last month. And then, but at the same time, if you don't understand how it's calculated, you can bloody yourself up pretty good.
Yeah. Excellent. And we got to this point without even mentioning AI once here, and the magnificent one, NVIDIA, which has taken a hit lately. It did rebound a bit today, up $1 at 107 and change. And this C3 AI company, which came out with disappointing earnings yesterday, slipped nearly $2 today at 21 and change. What about those names?
Well, something that I think investors are going to have to decide on. Do you want to try to catch a falling knife, which you're going to have to play that? It's an old adage from Wall Street where you have NVIDIA's down 10% on the month. You have Lam Research. Broadcom is going to post its numbers tomorrow. There's a lot of news out there, Frank, that involves AI. I would just say that, look, that they've had an amazing year. Certainly advice I gave people early on this show to take some money off the table. You have free money there. But I think that if you have too much of this in your portfolio and the volatility is bothering you, you really do need to rebalance your portfolio even after the hit. Because let's not forget, in spite of these hits, NVIDIA is up 116% on the year. So it's hardly, you don't want to cry over spilt milk, but it might not be the worst idea to rebalance things, knowing that these things were priced for perfection. Now reality's coming in. The froth has left the table. You're in a seasonal time of the year where the market typically does begin to discount things. It's a good time to rebalance.
On there live with money manager Ken Winans and also market historian, author, Investment Atlas 1 and 2, and soon to be Investment Atlas 3. Right, Ken? You've updated since the pandemic days when we were on the air pretty much every week back in those days, right? Tell us what we can expect in Investment Atlas 3.
My publisher came to me and said, Investment Atlas 2, it was printed 6 years ago, Ken, and in the printing world, that's a lifetime. And and we all know that much of the world had changed over that period of time. So Investment Atlas 3, it carries on the work I've done before. Many people haven't read 2 or 1, but the 3 will capture all of the past. But I added a section on it on crypto versus other times in the nation's history when we've had private currencies. I had the section on the COVID-19 pandemic and how it compared to what happened in 1919 with Spanish flu. I added a section on the Trump impeachment and how it resembled the Clinton impeachment. So I covered all the news items of recent history, but the message is still the same. If you're an investor, you need to pay attention to history. If you don't, you're asking for trouble. And I think that's the one thing I'm hoping the audience will get out of, certainly when I do interviews with you, with Winning with Winans, my Forbes articles, or my books. History, whatever I come up with, I can historically back it up, and it's important to follow.
Terrific, Ken. Appreciate that very much. And before I let you off the hook here now, let me ask you the big question once again. Any specific places where you are putting money now and or taking it off the table?
Absolutely. Well, first off, it's a good time to start tax loss harvesting. You live in California, you get hit with a lot of taxes. It's time to get rid of your losers. If you made the mistake of buying NVIDIA at the top, you might want to go ahead and just take your losses. If you wait 30 days, you can buy it back. But in my article about the strong greenback, the strong dollar, I specifically talked about, look, this idea of global asset allocation is one of those Wall Street ideas that has been a mess. If you have a portfolio full of emerging market mutual funds and ETFs, I mean, take a look at them. They've just gotten creamed over the last 18 to 24 months. It's time to get rid of some of these, I think, very outdated views of how to invest money. You live in the United States, invest in the United States, because the companies you buy here are global competitors. So I get rid of anything like that that's not doing well. What I would buy are inflation-proof stocks. The list I'm going to give you today are the insurance companies. They haven't skipped a beat, Frank, all year. Even this month, they're basically holding their ground. The 2 common stocks I would buy would be Aflac, AFL, or I would buy Progressive, PGR. If you're looking for an income play, go check out some preferred stocks. There's Allstate Series H paying 5.5% yield, and it's holding up very well. The other one, for anybody who's from New York and remembers the big MetLife building in Midtown Manhattan, go look at MetLife Series F. It's paying a 5.4% dividend. But, Frank, it's time to readjust those portfolios. Financials have done well this year. They're an inflation-proof area. That's where you want to weigh into. Look for strength.
Terrific, Ken. Wish we had more time here now, but luckily we will have an extended conversation, not this Monday night because we have the 49ers game on tonight, but next Monday night on Winning with Winans. We'll be able to continue the conversation, and we'll hopefully talk to you on next Monday as well. Top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, the author of numerous books, including the one we mentioned, Investment Atlas 1 and 2, soon to be 3. Forbes magazine contributor and also host of Winning with Winans, heard Monday night, 6 p.m. on 790 KBC. Ken, thank you very much for the call this afternoon, and look forward to talking to you again very soon.
Sounds good, Frank. Take care.
Thanks again, and let's get right out to the freeways now. It is hot, hot, hot out there this afternoon. Let's get the latest on your ride now. You're in 790 KBC.
The heat is on.
Yes, it is. Mottek On Money continues here in 790 KBC. The heat is on. Kind of a mixed finish today for the stock market. Some stocks were hot, some were not. Looks like Tesla had a hot day today with all the Teslas out there. We're just talking about that here. Tesla shares at more than $10 at $230 and change, a pop of 5%. One of the big gainers on the day. We did see Amazon moving up more than 4 at let's see. Amazon did move higher today by 456 at 177 and change. Meta moving up more than 4 as well to above 516 and change. And Google moving up 79 cents at 157 and change. Apple up $1.53 at 222.38. The Magnificent One, we mentioned earlier, NVIDIA up $1 at 107 and change. It's kind of fun to see how the billionaires did today. Number one on the list of wealthiest people in the world, according to Forbes magazine, Elon Musk went up today by $6.1 billion. He's now net worth at $252.7 billion, wealthiest in the world, followed by Jeff Bezos, the Amazon guy, $196.4 billion. He went up $4.2 billion today. And Mark Zuckerberg, Facebook Meta, as it's now known, he's at $179 billion. He came in with a gain of $1.4 billion today. Taking a look at the price of gold today, it moved up $4 at $2,547 and change. Silver up 7 cents at $29.17. Bitcoin, it's been taking a hit, up about 50 now at 56,075. Ethereum up 2 at 2,370, and Doge at 10 cents. And now the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. The Dow slipping 219 points today. The S&P 500 down 17. The NASDAQ managed a closing gain of 43 points. Big topic of discussions among lawmakers in Sacramento as well as elsewhere, reparations to African Americans for slavery and racial discrimination. Some bills in the California legislature did advance recently, but a last-minute protest failed to win 2 Senate-approved bills in Sacramento, a chance to be voted on in the state assembly. The chair of the Black Caucus promised that it would be reintroduced next year and called reparations a multi-year effort. Among the bills that failed, a bill to create a state reparations agency, the centerpiece of California's initial attempt to introduce legislation to repair harm endured by African Americans in California. Similar discussions happening in other states. Taking a closer look now at all these proposals with someone who's been following this issue closely. Andrew Quino is with us now, a Pacific Legal Foundation attorney who's also the director of the Reparations Task Force. Andrew Quino, thank you very much for coming to the line this afternoon.
Thanks so much for having me once again, Frank.
Now that the dust has settled in Sacramento, tell us what we need to know about this.
Yeah, so Sacramento had quite the event in the state Senate last week. After 4 years of buildup, starting with the Reparations Task Force that met for 2 years, and then legislation that was introduced earlier this year, the big reparations package of California just fizzled out. The Senate had the opportunity to vote on SB 1403. That was to establish this new reparations agency, the American Freedmen Affairs Agency. This agency would have been tasked with implementing the various proposals that were being pushed through the legislature, but that didn't even come up for a vote, nor did the bill that would establish funding for these reparations proposals. So essentially the mechanism for reparations and the funding for them just didn't make it. Now, prior to that Senate session, the Senate did pass, or rather the legislature passed SB 1050, which would compensate descendants of enslaved persons for property that was taken because of racially motivated eminent domain. That bill depended on this new agency that didn't make it in the legislature. It would have established an Office of Legal Affairs that would review these requests for compensation for racially motivated property taking. So what happens to that bill? I mean, that just, is essentially gutted because the thing that would allow it to function is just not there. Now, advocates say that they're going to try again. I think they certainly will, but I think this sends a big signal to other places around the country that are trying to start up their own reparations proposals. If California, as progressive as it is, couldn't do it, we'll see what other states and counties and cities will do.
On the live with Andrew Quino, Pacific Legal Foundation attorney. Certainly the state's budget situation must have been a factor in this, right? We saw the reports that Governor Newsom's staff intervened in some of these measures, right? What about that with the enormous deficit Sacramento's already facing, and how could the state possibly afford what they were talking about?
Yeah, and I think the analysis that the Appropriations Committee of the legislature gave was that the to operate the agency would have cost annually $3 million to $5 million. I think that's a very conservative estimate. It probably would have cost a little more than that. But nonetheless, the cost of all of these things did come into play. The solution that was being reported in Politico is that the governor wanted to extend more money to do a continued study of how to implement these reparations proposals. I think ultimately, though, what is concerning about why these bills failed is not because the focus on the budget and the deficit, which are very important to focus on, but the constitutionality of all of this. Really, these bills died not because anyone was concerned about whether they were lawful and whether they violated the equal protection of the law. So politics got in the way. Certainly there was some concern about the fiscal impact, but there was really very little concern about the legality.
On the air live with Andrew Quino. Now, let me ask you this. What about in other states? I know you've been tracking this on a national scale. Anything else that's been getting your attention on this issue?
I think New York State is the next big state to consider these proposals and take some action. They met for the first time, their task force met for the first time at the end of July, and they have 12 months to come up with recommendations to propose to their legislature and their governor and see if those get approved. I think, again, with what happened in California, it puts a damper on the efforts of other states, because if California couldn't get it done, it's hard to see if New York could get all of this done. And they were explicitly looking to California and seeing how that would all pan out. Now, New York is the one where, if you recall, had a member on their commission refer to Senator Tim Scott in very racially derogatory terms. Another member had tweeted out something or sent something out on X about blaming white people for climate change. So they were already off to a rocky and controversial start. So we'll see what they do in the next 12 months as they meet and try to put together some proposals.
We're on the air live with Andrew Quino, Pacific Legal Foundation attorney, who also is the director of the Reparations Task Force. And certainly, maybe you can give us a history lesson here regarding slavery in California. California did enter the Union, if I recall correctly, as a free state under the Compromise of 1850, but slavery was rampant. Maybe you can give us a history lesson here and how this plays out in the discussion here.
Yeah, you're right. California was admitted as a free state. It did not have slavery when it entered the Union. Now, there were some laws since then that implemented some discriminatory policies, and government actions were certainly discriminatory based on race, not just against Black Californians, but Californians of all races and minority backgrounds. Asians in California were not allowed to own land. Hispanic Americans faced significant discrimination. They faced segregation in public schools as well. So a lot of precedential court cases stemmed from a lot of discrimination that took place against Hispanic Californians. So with all of that history, the California Reparations Task Force really built on this sense of wanting to make up for and compensate this history, but at the same time ignoring a lot of the strides and progress that has already been made. And once again, looking past the legality of using race-based solutions to these problems. The government can only use race to compensate or to remedy specific instances of past discrimination. Unfortunately, the task force was using the very broad history and generalized history of discrimination to come up with solutions that violate the Constitution.
Andrew, thank you very much for taking the call and providing the best explanation and analysis that I've heard on this subject here in California. Andrew Quino, Pacific Legal Foundation attorney, is also the director of the Reparations Task Force there. Andrew, thank you very much for joining us live here this afternoon.
Thanks so much for having me.
And let's get right out to the freeways. Check your ride on this hot afternoon here on 790 KBC. Mottek On Money continues here on 790 KBC. New nervousness about the economy based on the jobs report we got last month, and tomorrow we'll be getting another reading. The monthly jobs report from the Labor Department for the month of August will be coming out first thing in the morning. Today we saw a mixed finish on Wall Street, and so far a nervous start to the week and to the month of September, this holiday shortened week coming off the Labor Day holiday weekend. We've seen some pretty wide swings, starting with a more than 600-point drop on Tuesday for the Dow, a slight rebound yesterday, and down again today, down more than 200 points, selling at 40,756. The S&P 500 down 17. The Nasdaq managed a closing gain of 43 points, and the yield in the 10-year note, which impacts fixed-rate mortgage rates, has slid to 3.73%. This is interesting here, not a good sign for the economy. A surprising percentage of American workers now say they are living paycheck to paycheck. And let's bring in Sarah Foster now, principal writer at Bankrate.com, who covers the Fed and economic policy and also has taken a closer look at this latest Bankrate survey. Sarah, thanks very much for taking the call this afternoon.
Thanks for having me.
All right, take it from the top and tell us your latest survey here on how many people, what's the percentage of folks out there who are living paycheck to paycheck these days?
Well, we wanted to look at specifically workers. So these are the Americans who are doing everything right. They're in the labor force. They're trying to make a living. But many of them mention, mostly because of inflation, that they feel like they're not in a financial position where they can save for future goals after covering their expenses. And according to our data, we're seeing that about 1 in 3 workers, 34%, are feeling like they're living paycheck to paycheck.
Is that an all-time high?
We actually haven't ever done this survey before, so it's new data. But what I think is really eye-opening is kind of looking at previous data that we have reflecting Americans' financial positions. So back in 2018, we saw that 39% of Americans couldn't pay an unexpected $1,000 expense from their savings. 2018 was before even inflation surged. It was before, high gas prices, high food prices were really becoming the cultural zeitgeist of the consumer. And it's barely budged over the years. It's recently hit 44% in 2024. So what I think this is showing is that inflation is making it worse. But, many Americans have long struggled with rising cost of living in the U.S.
That's for sure. Here in Los Angeles, the face of homelessness has changed. Even people who have full-time jobs and cars have become homeless simply because they can't afford the rents these days. So you're absolutely right about inflation, especially rent inflation that we've seen here in the Los Angeles area as well as other parts of the country. So that is very, very significant. So and that's got to be a factor here in the survey. Any other insights that you were able to pick up based on what you found out about this latest survey?
Yeah, I think something that's really important to keep in mind is that many Americans, regardless of how much money they make, are feeling like they're living paycheck to paycheck. But, the less cash you have on hand, the lower the income you make a year, the more likely you are to feel this way. Something that was really eye-opening to me was that 43% of Americans, these workers who make less than $50,000 a year, say that they're living paycheck to paycheck versus about 24% of those who earn $100,000 or more. So it's really these low-wage workers who are especially fragile to this high inflation environment as they struggle to afford their everyday essentials and just continue to feel priced out of America.
Very, very significant and eye-opening in so many ways, this financial security increasing with age based on what you just said, according to this Bankrate survey. So financial insecurity going to be a big issue certainly here as we head into the next Fed meeting, and they'll be taking a look at the jobs report that'll be coming out tomorrow morning, as well as of course, the inflation readings. While we have you on the line here, Sarah, what's your expectation, what we might get tomorrow morning when that big jobs report comes out, and what the Fed's next move might be later this month?
Yeah, it's going to be a big report, and in fact, probably the most pivotal jobs report that we've had for some time. I think the question that we're looking at Bankrate is that unemployment rate and the job growth numbers. The BLS mentioned that Hurricane Beryl, which hit the fourth largest city in the U.S. last in August, July. BLS mentioned that, there was that modest impact, little impact at all. But many economists, including us at Bankrate, have been looking at, the fact that maybe Hurricane Beryl could have had a bigger impact than was initially reported. So if we do see the unemployment rate edge lower, it could be maybe an encouraging sign. But of course, if that doesn't happen and we continue to see that job growth is slowing, it's probably time for the Fed to begin thinking about just how much they should cut interest rates over the course of the next year.
All right, and of course, it's been widely reported it's either going to be a half point or a quarter point cut. What do you think is going to happen?
Well, I think, we'll know for sure tomorrow. And the thing that's going to be helpful, too, is keeping an eye on Fed speak coming out. So tomorrow is really the last day that Fed officials can give clues about how big they're going to go in September. Right now, I think it's fair to say that the Fed would probably want to stick with that more modest quarter point rate cut. But of course, if there is that sharper slowdown than expected in the data tomorrow, you could see some officials start to rally behind a bigger half point cut. So right now, more modest is what it looks like. But obviously, the economy is evolving, and you often have to evolve the policy response with it.
Right. We did get some sluggish readings on jobs already today and this week, so we'll be keeping a close eye on what comes out first thing tomorrow morning and the market reaction. Sarah, thank you very much for sharing the results of that Bankrate survey, as well as your insights on consumer issues and the economy. Sarah Foster, principal writer at Bankrate.com, who covers the Fed and economic policy. Thank you very much for joining us live here this afternoon.
Thank you for having me.
Recapping the action today, the Dow down 219, the S&P 500 down 17, and the NASDAQ at 43. The jobs report will be coming out an hour ahead of the opening bell first thing tomorrow morning. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here. Mottek On Money on 790 KBC.
The Rolling Stone Music Now podcast gets inside the biggest stories with Rolling Stone senior writer Brian Hyatt, movie director James Mangold.
I want to turn Bob Dylan into a simple character with a simple thing to unlock that then makes you go, oh, now I get him. First time I sat down with him, he said, what's this movie about, Jim? It's about a guy who's choking to death in Minnesota and reinvents himself in a brand new place, becomes phenomenally successful, starts to choke to death again, and runs away. And you smile. He was like, I like that.
Rolling Stone Music Now, wherever you listen.